Welcome to the Startup Leaders Show, where we learn lessons from leading startup founders and executives. I'm your host, Lisa Dreher. I'm excited to introduce our guest for today, Manny Zareh. He is the Senior Vice President of Investments and Research at Emles Venture Partners. Welcome to the show, Manny.
Hi, Lisa. Thank you for having me. A pleasure.
Oh, absolutely. Thanks for joining us. So maybe we can start by just having you give a little bit of background on Emles Venture Partners.
Sure, absolutely. Well, Emles Venture Partners, our story really begins and ends with our founder, Gabriel Hammond. Gabriel started off his career at Goldman Sachs, and then at the age of 24, left and started two businesses in the investment management arena where he democratized access to an asset class known as massive limited partnerships, or MLPs. After two successful exits, started Emles Venture Partners really to promote entrepreneurism. So currently, Emles Venture Partners, we have approximately 50 portfolio companies. We're industry agnostic. But what I think is unique about us are the following features. Number one is it's our own capital, family money, if you will. So we don't manage for a fund life. Number two, if not more important, is the fact that the majority of our fund is comprised of the following founders, either international founders, underrepresented minority founders, or female founders. And for some reason, we've just gravitated to those founders because we believe that they present the best investment opportunities. And those are the people that we've selected to kind of lead the companies that we want to be associated with. Third is our geographic breadth, if you will. We have investments spanning all over the world, if you will. We're on every continent besides Antarctica and Australia. And our investments span from Nigeria to Colombia, from Pakistan to Israel. And I would say that going forward, we're going to continue focusing on the founders that I mentioned earlier. And we're also going to probably have a little bit more of a sustainability bent, if you will. And in addition, lastly, I'll end with, we try to be a partner to our portfolio companies, and myself or Gabriel sit on several of the boards of the companies that we have invested in.
Wow, that's great. So when you look at some of the trends that are happening in the market right now, what are you keeping a close eye on?
Sure, absolutely. Well, I think some of the when we try to assess any investment opportunity or trends, if you will, is there's as I mentioned, we are industry agnostic, but there are themes that we like. So we look for areas where we believe there's going to be a lot of secular growth. That could include like cannabis, for example. We think that market is really poised for double-digit CAGR growth for the next decade plus. Another area, of course, is esports, and I think that's been kind of accentuated over the COVID, kind of represented how that's become much more mainstream. AI is another area where I think we're just in the early innings of kind of the new evolution of technology, when AI's implications can be found in either investing in the investment world or in the biotechnology world and drug discovery. So for us, when we try to look for trends, if you will, it's really about the growth prospects, and additionally, how can they kind of come in and displace some of the incumbents that have been dominating their respective fields.
Gotcha. What are some of the things that investors or business leaders should be doing to kind of stay ahead of these trends?
Well, I think as a venture investor, if you will, it's you got to breakfast, lunch, and dinner with founders, I think, is imperative, right? It starts with being a partner with your existing portfolio companies and their founders, and consistently being out there pounding the pavement, networking. Of course, I take it as a given that you're going to be reading the daily publications that we're all looking at and kind of staying attuned of the tech news, if you will. But nothing can replace that interaction that you have with thought leaders. I also think something that's really benefited my career, especially, and I think it's helped us, and this is from Gabriel's advice, if you will, is kind of hosting forums, right, where we gather thought leaders on specific areas that we're interested in learning more about, whether it could be from biotechnology or to SaaS plays, et cetera, or even just industry experts, trying to partner with them, host the intimate forum of about 5 to 10 other investors or founders, if you will. It's very easy to do with Zoom these days. And just being able to actively listen, participate, ask some questions, I think really has allowed us to stay on the forefront of trends that we're really interested in.
Yeah, that sounds like a great way to do it.
Yeah.
Are there are there changes that you've seen in the investment market? What do you think are some of the biggest changes that have been happening lately?
Sure. Well, one of the biggest changes that I've seen is, the world is awash in capital right now, right? And there's been this trend towards a democratization of an individual investor being able to access startups. So what I'm basically trying to say is that startups now have a unique access to capital where before they didn't have, right? They were trying to get into angel clubs or venture capital clubs. So what you're going to see is a lot more startups more easily find funding, if you will, right? And that's fantastic. At Emles, we're all about democratization, if you will. But at the same time, we all have to be aware of the fact that there's going to be some startups that more startups are going to fail probably more than ever, and that's okay. That's part of the whole game. But for us, I think that entire the world being awash in capital, more availability of it, a lot of more ideas to sift through. I think it presents both an opportunity and a challenge for the investor and for the founder, right? It's
Yeah.
that partnership. As a founder, you want to make sure that you have the right partners on your cap table that are value add. And as an investor as well, you want to make sure that you're sifting through the constant deluge of different investor decks that you get.
Yeah, yeah. So in terms of success factors, what would you say are some of the major success factors for startups?
Yeah, I mean, it begins and ends with the team, right? Especially we're seed investors, and it's always going to be about the team. So when we invest, sometimes the product market fit is not necessarily clearly defined. The go-to-market strategy isn't clearly defined. But what we're banking on is at the end of the day that the founder is going to be there longer term, right? And the success factors that we look for in any founder, if you will, I think it really is the EQ, the emotional quotient. A lot of people tend to put too much emphasis on the IQ or the background, or they worked here, went to this or that school. But the founder, they just have that it factor. You can tell. It's kind of akin to when the Patriots drafted Tom Brady and the game gave him his shot, and then you see how he did. He necessarily didn't have he wasn't the fastest quarterback in the league. He didn't have the best arm, but he had that it factor, the ability to lead his organization and take him to playoff games and then win championships after championships. And I think of that often when I'm meeting with founders. Do they have that it factor? And what is that it factor? You can't necessarily quantify it or describe it, but I think having the audacity to dream big, having that inner confidence. And in parallel with that audacity, I think is also resiliency, right? Because inevitably you're going to face peaks and troughs in some certain valleys as a startup, and the ability to pivot, the ability to stay within your comfort zone, but also being comfortable being comfortable being uncomfortable, I think is extremely important for founders. So I would say that those are the biggest attributes that we kind of try to look for.
Great. When you look at founders and you're kind of talking about some of these success factors, well, what are the biggest pitfalls that a lot of these founders make?
Sure. I think one of the pitfalls that I see very often is that founders don't just clearly express their vision. It sounds very easy, but it's actually pretty difficult. They can get wrapped up in the details and the minutia, if you will. And as a seed investor, you're really there to dream the dream with the founder and understand, yes, this is your current product, your current strategy, but walk me through the next several years, walk me through the next decade. And it doesn't necessarily just have to be about this company, just in your career in general, right? And I think that the inability to clearly define what it is that the company is currently doing and how that's going to take them from point A to point B to point C, and walking the investor through that trajectory of success, I think it's something that founders need to work a lot better on. Keep in mind, we're getting a lot of different investment opportunities sent our way. I love it. It's my favorite part of the job, but it just makes our job easier if we can understand what the pitch is or the dream is. And I think that's extremely important, just being very clear and precise.
That's good. What would be one piece of advice that you would give to founders?
Sure. So I think it goes back a little bit to that audacity, but don't be afraid. And by that I mean don't be afraid to fail, right? And if you're going to fail, fail early. That's okay, right? that's a extremely, founders, I think sometimes they're a little bit worried about, like, okay, I said X, Y, and Z, and I got to produce on X, Y, and Z. But as a seed investor, we understand that that's not going to be the case, right? We recently had a portfolio company call me up and say, look, hey, look, my vision at first isn't necessarily working. I've tested a whole bunch of different things. The numbers that came back weren't what we expected, and now I'm going to make a pivot. Can I talk to you about that? And to me, I mean, of course, like that was fantastic, because they're several months into the opportunity, if you will. They found some key learnings, and they're now quickly pivoting to a much bigger and better opportunity where they've gained a lot of traction already. And I think that inability to not be afraid to fail, and understanding that failure is okay as long as you do it early, right? And know where the data is taking you, I think, is extremely important, right? Don't necessarily be too stubborn. If something, after a good amount of time and effort, if the data is showing you the path is not working, it's okay to pivot. I actually don't consider that failure per se, right? That's just the conventional definition of failure. To me, success, it presupposes some amount of failure along the way. It's just that ability to navigate it and quickly adjust.
Yeah, yeah. So what would you say are the key criteria that VCs use to determine which investments they're going to make?
Sure. Well, I mean, I've spoken at length about kind of the founders and their importance, if you will. I think other issues or other key factors that we look at is the secular growth rate of any industry that they're participating in. How large is the market, the TAM, if you will? We always think about that. As a venture capitalist or a seed investor, you're looking for the moonshot, if you will, right? You want to be able to. I don't want to gravitate towards just an investment that's going to, maybe double or triple our money over a 10 or 15-year time horizon. That's not. We want to be involved in companies that are really out there that are changing the world in essence, right? And I think that's why our bent towards sustainability or ESG is extremely important, because when you gravitate towards those kind of initiatives, the TAM is just gigantic. It's enormous. Companies that are tackling important issues like climate change, right? I mean, the opportunity is endless there, right? So what I'm suggesting is we would like to go for opportunities that we think have this ability to really, impact the world in a major way. Also, I think what's extremely important is, I think product market founder fit is a key criteria, right? Like, has what the founder is what he's suggesting or she is suggesting that they want to do, does that fit in with their background, right? Or their team's background, right? How does that fit in with the market and the opportunity out there? I think when you combine those three, it's extremely important. So, and of course, look, you're gonna take other things into consideration. Valuation is always going to be a consideration, right? There is a price at which we'll pay up to, right? And of course, I think seeing, a key thing that founders should also keep in mind is when they set the valuation, right? It also shows us if they're thinking about the short term versus the long term, right? I think that's extremely important. We position ourselves as long-term investors. We're not here to make a quick return, if you will, right? Nothing would make Gabriel and myself happy than all of our portfolio companies staying within the family, the Emles family, if you will, right? And they just keep on producing cash flow, cash after cash flow. But I think when you set the different terms of your rounds, you set the different valuation metrics, et cetera, that's also an indication to us about, how you're thinking about the long-term prospects of the company.
Sure. So kind of, I guess, bouncing off that, when you look at closing a round of funding, it doesn't end there, right? I mean, that's kind of just the beginning. So what do you want founders to keep in mind once they close that seed round or that Series A?
Yeah, Lisa, I mean, I really appreciate you asking this question, because it's something that's kind of overlooked a lot. And I've thought a lot about this. And it's that I want the founders to know that the investors are their teammates. We're there to collaborate with them. We're not their bosses by any stretch of the imagination. Come to us with questions. Come to us with concerns. Come to us with ideas. We're not here just as a check, right? And then get an email once a month or once a quarter with an update. Wow, that's fine. And if the business is going great, fantastic. But we really are your teammates. We really are like partners with you for the long term. And obviously, I'm not going to have all the answers. Gabriel may not have all the answers. Investors don't necessarily always have the answers. But I think a sharing of information, a good flow of conversation, even playing devil's advocate behooves everybody, right?
Yeah.
And you never know what one conversation can lead to or another connection it can make. So I think the founders should really take into account that their investors are their teammates, right? I think that's extremely important. Something that's often overlooked. They may not want to bother us. It's not a bother at all. I love hearing from my portfolio companies and their founders. It's a joy.
Yeah. So one of the things that you mentioned earlier in the call was participating on the boards of a lot of these companies. Yeah. And I know, every month or every quarter, whenever these board meetings come up, there's always this flurry within the company to get ready for the board meeting.
Yeah.
So, as the board member, what are the types of things that you want them coming in and talking about? What is the stuff that they talk about that you're like, I don't need to know that? And what is the stuff that you really want to know about?
Sure. Well, I think, it depends for what company or what industry, of course.
Sure.
But as a board member, well, my favorite, first of all, I think it shouldn't be just kept to like quarterly board meetings. I'm not necessarily a fan of that. Again, keep in mind, we're investing in pre-Series A companies, Series A companies, right? At said point, Gabriel and I we appreciate that we may not need to be on the board anymore. Maybe somebody else is better fit for that. But I would say that we're always interested in thinking about the big picture. Like, what is a strategic outlook, right? What have you done since our last conversation to achieve the goals that we've set? What were the roadblocks? And how are we going to adjust those in order to achieve the end goal that we have? Whether that, and maybe it's the next milestone. Maybe it's as simple as, okay, we want to get to X, Y, and Z, so we can raise a bridge round in the call it winter of 2021, right? And kind of keep us up to date on that. And I think something else that is extremely important is these are small companies, right? At the end of the day. So if there's key hires, we would love to learn about that, right? Again, it's that partnership aspect of it. If there's some key hires, please talk to us about it. But some of the minutia that's maybe shared in terms of like the budget and stuff. Obviously, if the runway's coming, is being truncated, we want to be aware of that. But we don't need to go through every last dollar and go through the accounting and stuff like that. I think keeping it higher level. What were the milestones that have been achieved? What are the roadblocks? How are we going to get to point X, Y, and Z? That's most important for us.
Yeah, that's really helpful. Like I said, I know that being on the side of the company and having to prepare for those board meetings, it's always really useful to know what does the board actually want to see, So
Of course.
Thank you for that. Well, I want to end our interview with one more question, and that is, if you were to make one prediction about the future, what would it be?
Well, I'll keep it to the tech space, if you will, right? But I think, when I think about the future, and I think about tech in general, right? It's very much akin to like Wall Street back in the 70s and 80s. It was unregulated, unencumbered, if you will, right? And it was the wild, wild west, and there was a lot of money to be made. And then all of a sudden, in the late 90s, early 2000s, we started seeing more and more increased regulation. And I believe that's what we're going to see in technology, if you will, right? I think big tech is on the everyone's talking about it, and now the governments worldwide are trying to figure out what kind of regulatory framework are we going to have that could include privacy concerns, anti-competitive concerns, right? I think those are some things, especially with the advent of digital assets, Bitcoin, BTC, Ether. Like, these are all issues that people are going to tackle. Governments worldwide are going to tackle. And I believe that it behooves the companies to get out in front of it, right? Be collaborative, be anticipatory of that. Go work with the legislators, go work with think tanks, try to produce that policy hand in hand with the legislators, if you will. Don't be reactionary, because then you can kind of formulate a policy that's more beneficial to you, to all your stakeholders, whether that's your employees, your investors, your clients, etc. I think that's going to be a big thing that that we're kind of focused on, especially with digital assets and that evolution, if you will.
Absolutely. So kind of talking about that, what's
Yeah.
your opinion on the whole Robinhood, GameStop?
Well, I appreciate you asking that. Yeah, before I was a venture capitalist, I was in the hedge fund space for quite a while. Look, I think it shows democratization at its best, and at its worst at the same time, right?
Yeah.
I think nothing is necessarily. I find things that very rarely are things black and white. There's a shade of gray in everything, right? So I think for the hedge funds to be blamed completely, to be in the wrong, I think that's not fair. I think Robinhood not allowing people access to sell shares, horrible. I don't think that's appropriate at all. But what it did show me, and I think the key takeaway is that you're going to have to anticipate that retail is going to, it goes back to my earlier point. World is awash in capital. There's easier access to invest, whether that's in the public markets. There's frictionless costs now, right? Trading platforms are not charging you anything. Companies, no matter how big they are, how small they are, from like a GameStop to one of our Series 8 companies, you got to be aware of like the retail investor and the impact they could have and the access they may have to, on the venture side, could be through something like a crowdsourced funding platform like AngelList, et cetera, right? So I think it really requires the companies to be more aware of their investor base and understand like who is really investing in this. And secondly, and lastly, short sellers are not necessarily the worst thing in the world. I think, there's been many publications that have been written about how they've made for more efficient markets, if you will, right? Some of the biggest frauds in the history have been uncovered or unearthed because of short sellers, right? So there is a place for everybody. We're just going to have to figure it out. And again, it's one of these things, a new kind of trend or a new technology, new concept like frictionless trading came about, and we're just going to have to adapt to it. So I think that's going to be extremely important.
That's great. Thank you so much for making time for this today. Your insights have been so incredibly valuable. Hopefully you'll get even better pitches and have more efficient and insightful board meetings now.
Well, thank you, Lisa. And I appreciate it. And look, I wouldn't be in my seat unless like people took a shot on me throughout my career, like mentors, if you will. And they always made themselves accessible. And that's another thing at Emles Venture Partners. We pride ourselves at being accessible, right? So for all the founders that are watching, I want to make myself accessible, not just to our portfolio companies, but potential portfolio companies. Please feel free to reach out to me directly. My email address is my first name dot last name at emles.com. That's Emmanuel.Zareh@emles.com. Don't be afraid. Reach out. Let's have a conversation, 10 or 15 minutes. Email me at any time, and I'll look forward to getting back to you as soon as I can. And hopefully we can share and collaborate. But I appreciate this opportunity, Lisa. Thank you very much.
Absolutely. Thank you very much.
Thank you.